All right, let's talk money. You've got two options staring you in the face, M1 Finance and Fidelity. You're looking to invest, grow your wealth, maybe even retire comfortably one day. But here's the burning question: which one is going to actually get you there? Are you going to be kicking yourself in 5 years, wishing you'd chosen the other platform? Are you going to be stuck with fees you didn't see coming, or a clunky interface that makes you want to throw your laptop out the window? See, we've all been there. We've all stared at those flashy ads, those promises of easy investing, and wondered, is this for real? And when you're dealing with your hard-earned cash, for real is the only thing that matters. So, let's cut through the noise, ditch the jargon, and get down to brass tacks. Is M1 Finance really better than Fidelity, or is it just another shiny app that's going to leave you holding the bag? First, let's paint a picture. Imagine you're building a house. You need a solid foundation, right? That's your investing strategy. Now, you need the right tools. That's your brokerage. M1 Finance and Fidelity? They're both toolboxes, but they're built for different types of builders. M1 Finance is all about the pie. Picture your portfolio as a pie chart. You allocate percentages to different slices, stocks, ETFs, whatever you want. It's a set it and forget it kind of approach. You define your target allocations, and M1 automatically rebalances your portfolio to stay on track. It's like having a personal chef who automatically adjusts your meal portions to keep you healthy. Sounds pretty good, right? Fidelity, on the other hand, is more like a full-service workshop. You get access to a massive range of tools and resources. Individual stocks, bonds, options, mutual funds, you name it. They've got research reports, screeners, and a wealth of educational content. It's the place you go when you want to get your hands dirty, when you want to actively manage your investments. So, who wins in the ease of use category? For the hands-off investor, M1 Finance is a clear winner. The pie interface is intuitive, and the automated rebalancing takes the stress out of portfolio management. You just set your targets and let the platform do its thing. Fidelity, while powerful, can be overwhelming for beginners. The sheer volume of information and options can be daunting. It's like walking into a hardware store with no idea what you need. You're going to get lost. But for experienced investors, that depth of resources is a goldmine. Now, let's talk about fees. Because let's face it, nobody likes paying extra. M1 Finance is known for its low-cost structure. They offer a free tier with basic features and a premium tier, M1 Plus, for a small annual fee. The free tier is great for most investors, offering commission-free trading and automated rebalancing. Fidelity has also moved to commission-free trading for stocks and ETFs, which is a huge plus. They do charge fees for certain mutual funds and options trades, so it's important to understand the fee structure before you dive in. Here's the kicker: M1 Plus gives you access to a host of extra features, like a higher interest rate on your cash balance and access to a borrowing line of credit. If you're looking for those extra perks, the annual fee might be worth it. But what about the investment selection? Fidelity blows M1 Finance out of the water in this category. Fidelity offers a massive selection of stocks, ETFs, mutual funds, bonds, and options. You have access to virtually any investment you can think of. M1 Finance, while offering a respectable range of stocks and ETFs, is more limited. You can't trade options or bonds on the platform. If you're looking for a wide variety of investment options, Fidelity is the clear winner. Now, let's address a critical point: fractional shares. Both M1 Finance and Fidelity offer fractional shares, which is a game changer for investors with limited capital. You can buy a slice of your favorite company, even if you can't afford a full share. This allows you to diversify your portfolio without breaking the bank. But here's where it gets interesting: M1 Finance's fractional shares are integrated into its pie-based system. This means that when you rebalance your portfolio, you're automatically buying and selling fractional shares to maintain your target allocations. It's seamless and efficient. Fidelity's fractional shares are also available, but they're not as tightly integrated into an automated system. You'll have to manually buy and sell fractional shares, which can be a bit more time-consuming. Let's talk about research and education. Fidelity is a powerhouse in this area. They offer a wealth of research reports, analyst ratings, and educational content. You can access detailed information on stocks, ETFs, and mutual funds. They also have a comprehensive library of articles and videos on investing topics. M1 Finance's research and education resources are more limited. They offer some basic information on stocks and ETFs, but they don't have the depth of resources that Fidelity provides. If you're looking for in-depth research and analysis, Fidelity is the better choice. Customer service is another important factor to consider. Fidelity has a reputation for excellent customer service. They offer phone support, live chat, and email support. They also have a network of physical branches if you prefer in-person assistance. M1 Finance's customer service is primarily online. They offer email and chat support, but they don't have phone support. This might be a drawback for some investors who prefer to speak with a representative directly. Let's look at the borrowing aspect. M1 Finance offers a borrowing line of credit, which allows you to borrow against your portfolio. This can be useful for short-term liquidity needs or for leveraging your investments. However, it's important to understand the risks involved before you borrow against your portfolio. Fidelity also offers margin accounts, which allow you to borrow against your portfolio. However, the terms and conditions may vary. Now, let's consider the type of investor you are. Are you a beginner who wants a simple, hands-off approach? M1 Finance might be a good fit. Are you an experienced investor who wants access to a wide range of investment options and research tools? Fidelity is likely the better choice. Do you prioritize low fees and automated rebalancing? M1 Finance shines here. Do you need access to a full suite of financial services, including banking and retirement planning? Fidelity's broader offerings might be more appealing. Think about your long-term goals. Do you plan to actively manage your portfolio, or do you prefer a more passive approach? Do you want to invest in a wide variety of assets, or are you focused on a specific niche? If you are looking for a simple, automated investing experience, M1 Finance is a great option. If you want a full-service brokerage with a wealth of resources and investment options, Fidelity is the way to go. Ultimately, the decision is yours. Take the time to research both platforms, consider your investment goals, and choose the one that best fits your needs. Don't let the flashy ads or the hype sway you. Focus on what matters most to you. So, is M1 Finance better than Fidelity? It's not a yes or no answer. It depends. It depends on your investing style, your goals, and your preferences. With that said, thanks for watching, and until next time.